when these things go to zero, who are you going to call? So I don't care whether it's the stock market or the bond market or the ETFs or the mutual funds or the annuities or any of that intangible stuff. Those are Wall Street products, and they are designed to transfer wealth. They are a wealth transfer mechanism. You can buy into it, but this is how we can create a quiet revolution. You vote with your wallets. You have a choice. You either put it into this stuff, or you put it into something that's real, that's been real for thousands and thousands of years. There is a reason, Mario, why dynastic wealth, which is wealth that has lasted in families at least 300 years, is made up of real estate, rare collectibles, and gold. And arguably, gold is the most important. First of all, you can do all three things with gold, but arguably, it's the most important thing because it holds your purchasing power and enables you to take advantage of these crises that are being created artificially to transfer your wealth their way. And the U.S. Treasury bonds that were sold as the safest thing that you can do, the deepest and most liquid pool, have been having liquidity issues, the ability to buy and sell without moving the price much, really since 2015 was the first report. But it was handed over, that market was handed over to traders in 2013, and that started in 2008 as the system collapsed. And the banks were shifting, and the private equity and the private money was shifting. I mean, this whole system is a huge house of cards. This is your stability, along with food, water, energy, security, barterability, wealth preservation, community, and shelter. When you're talking about the rise in interest rates, you have all the major players, so the governments, the global central banks, as well as the commercial banks, the market makers of those banks, but that's been going away for a long time. So you've got the entities that typically stabilize the market because they're buy and hold, and that risk is being transferred to the public, to the mutual funds, to the ETFs, to the pension plans, to the insurance companies, 401ks, IRAs. That's what we're seeing right now, is that risk transfer mechanism as yields are rising. And they want us to believe that everything is hunky-dory. I mean, Wall Street just came out with this big thing about, how the consumer is so strong and can steady and support the economy. That's just perception management, so that the public, as long as they're okay, they think, oh, okay, well, that must be true. And then they continue to buy into this market and support that risk transfer without realizing what's really happening. Is the consumer really that strong? I hate saying that it's stimulus, because it really just is issuing more and more debt and encouraging everybody to grow more and more debt. And boy, didn't we see the problem with all of that debt in 2008, when you had everybody owning 6, 7 houses, but they were all done on debt, and then that whole thing collapsed. Debt does not really grow wealth. It only gives you the imitation of wealth as long as it works. But let me tell you, there's not one doubt in my mind, but that debt bubble has been popped by the global central banks, raising the rates that they can control, but the market now raising them even further. And they're going, oh, see, the markets will do, our job for us and create that tightness. So, the consumer is not strong. We've got auto loans that are souring at the fastest rate in history. We have bond yields and different things that are happening, the volatility and the foundation of the global bond markets. That's like in an earthquake pattern, right? Yeah. Yeah, I don't even think it looks like things are good. And when you look at the balance sheets of the central banks, now they want you to think that it doesn't matter, except that the Federal Reserve, for all of their manipulation, would give the Treasury any excess earnings that they had, and now their balance sheet looks like this, right? Or their ability to give the Fed or the Treasury any money, they can't. So when you're looking at debts and deficits, does that not matter? And we've got a completely dysfunctional government. They couldn't agree on how to open that door in my office, right? So what do you have? Globally, the credit rating, and it should go down. I mean, the credit rating agencies, I don't have a whole lot of respect for. They changed their rules and their parameters before the 2008 collapse. They've done it again now. So can you trust any of that? No, you can't. Maybe you have the gold and silver, but this person over here has the food, and this person over here, knows how to take care of your water issues or your energy issues or all of those pieces of the mantra. So coming together in community means that you get to share the gifts that you have, which was a huge lesson for me at one point in my life. Like in my neighborhood, I've put gardens all around, right? So any of my neighbors know that if they walk by, don't take the last one, but they can pick a zucchini, they can pick a pomegranate, and they can feed their children. Because let's face it, desperate people do desperate things. But if you come together, even in your neighborhood, you are going to find that there are so many different skill sets and talents that are right in your neighborhood. Proper diversification. They wanted you to think that if you had bonds, that was diversified from stock, but they're all fiat money denominated. And so they want these things to not reflect badly on any statements you get, because then you become aware that there is a problem, but it might be too late. So the real diversifier are tangibles, and gold is the primary currency metal, silver is the secondary currency metal, and gold is what they reset, because it's all intrinsic value. It's what they reset the fiat money against when all confidence is lost, and that's when you will see gold go to its true fundamental value. So properly diversifying. If you can, I mean, everybody's got to do what they're comfortable doing. As an ex-stockbroker, as an ex-banker, as somebody that considers herself a technician and understands the language that they're speaking, other than some cash, I do not hold any fiat money assets at this point in time.